We all look like our profile pictures. What a rarity on this online world that we have. Um, yeah, let me kick off the event. Sounds like the gang's all here. So we'll send a ping out to the community at large, hopefully get a few more folks joining us now that we've started. Lovey. Okay, what happened? Yeah. So yeah, welcome everyone. Really excited to kick off today's AMA. This week, obviously, we are here to talk about a pretty significant update to our network's economic model since launch. Um, in case you guys missed it, want to just scroll up to my kind of intro post to today's AMA. The Open Metaverse Monetary Authority, OMMA, two reps of which you see on stage today, just voted to make some pretty big changes to staking rewards, token unlocks, and issuance rates. These were kind of developed jointly by the LAMINA1 core team, the Open Metaverse Foundation, as well as our newly elected community seat, Ed Keys, who, we get to see him. He's coming on stage to kind of help represent the decision, um, kind of answer a ton of community questions around, the why, the how, the what, the inner workings, the specifics of how this is going to roll out. And we also know that this update did spark a ton of discussion and in some cases frustration in the community. So today's AMA is all about clarity, transparency, building toward what's next, giving you all some sneak peeks into what we're developing, which is why we have Rebecca on today. And yeah, I'm really excited to kind of dive in. I think we're going to start actually with kind of how this decision came together. Then we're going to clear up a few misunderstandings and kind of top questions from the community. And then we will definitely make sure that we leave enough time to kind of like open up the floor to community questions and make sure that you guys can get all the nitty gritties answered. So yeah, do we want to just do a quick hello around our speaker roundtable to kick things off?
Sure.
Yeah, Ed, go
So
first.
I'm Ed, the community representative on OMMA. So fairly elected in a completely open election. So I am the outsider on this community, but I'm here to represent all of your voices, hopefully.
I think you guys know me, but I'm Rebecca Barkin. I'm the CEO and co-founder of LAMINA1. So I haven't been in here in a while, but we get a lot to say today. So hopefully you guys will be excited.
And yeah, good to see you all again. I'm Will, CTO. Been here a few times.
Will is also, just for, a peek behind the curtain, Will is also our LAMINA1 core team seat on the Open Metaverse Monetary Authority. So Will and Ed have been in a lot of calls and email threads and things lately. So yeah, I think to kick things off, actually, we're going to start with you, Ed. I mean, as the elected OMMA community seat, you have been in the middle of these conversations for kind of weeks now. So I'd love just to kind of kick things off, like as our bridge from the OMMA to the rest of the community, would love for you to share a little bit about how you've kind of been representing the community perspective in these negotiations and kind of what you push for on behalf of stakers and token holders, and kind of give us your side of the story before we kick off.
Sure. So I guess probably the first thing to say here is I don't think that there's any like magic wand here where we can just tweak a few percentages and just instantly generate millions of dollars of value to just fix everything. So if you've interacted with me on the server, you kind of know I've got some strong personal opinions about locking policies and staking. And sometimes I just really love to just take a wrench to the tokenomics here. But as the community representative on OMMA, I really wanted to advocate not just for me, but for all of the different stakeholders. All the people who've invested their money, their time, put their faith in LAMINA1. So we tried to consider the original investors, all of the airdrop recipients, early stakers, late stakers, and we also tried to think about what would be the experience of the users that aren't here yet, but will be coming later. We'll need to start from scratch and coexist with all of the old timers and the whales. So I guess like fairness was really the watchword that we tried to come back to. There were a number of proposals on the table, and some of them honestly would have been better from a pure tokenomics perspective in terms of like controlling the token supply a little bit better. But they would have hurt some people by and been unfair by really changing the terms of the deal that they'd all originally signed up for in perfectly good faith. So I guess instead we ended up with what I think is a pretty decent compromise. We didn't touch anybody's airdrop. We didn't really touch the investors' tokens. We did cut back on the staking rewards, but honestly, it's the same type of drop in yield that has been happening continually over the past months and would have continued to happen anyway. It's just kind of a little change in the slope. The big change is sunsetting the staking system, and that's going to still happen down the road. And we really want to be fair about the way that we approach that, because it is kind of a substantial change of plans, and we want to be sure to be able to kind of unwind everybody's stake positions fairly there. Let's see. So one thing I do kind of regret is that OMMA didn't really get rolling until we were kind of staring down the face of this 9-month deadline. In retrospect, it would have been better to have a lot of these conversations earlier and kind of more openly in public to get more transparency and more feedback about the plans. So I hope that we'll be able to do a little bit better about that when we're putting together the Tokenomics 3.0 plan going forward. So along those lines, everybody, please continue sending your feedback in. It's like, this is what I'm here for. I'm all ears. I'm your representative. So I really wanted to listen and to represent your interest and your good ideas, honestly. So that's kind of my take on it.
Thank you so much, Ed. And I think XCOS, your question definitely kind of gets us into a couple of kind of like key clarifications that I know we kind of want to dive into and talk about before we dive into nitty-gritty questions. I think in general, like the first thing that I want to chat about, and this is going to be a question for you, Will, is like this idea of staking sunsetting, right? Like, what does this actually mean? Are we sunsetting staking in general, or just this system? Will we get our tokens back, and when? Tons of questions and like misconceptions and confusion around this. So let's dive into it.
Yeah, I'll just cover the sunset staking side of his question. He has a question of like, okay, if we're not staking, what else are we going to do with the token? And I think we're going to cover that a little bit later. But sunset staking basically means that this upcoming quarter is going to be the last quarter that uses this specific implementation of the staking system that we laid out in the white paper and that we deployed to the chain. And so you can continue staking now until the end of this upcoming quarter, so basically through the end of November. The rewards will be significantly lower than previous quarters. We'll talk about that in a little bit. That was one of the major changes, as Ed mentioned, one of the major changes that we made to sort of limit liquidity in the market. But I do want to say, like, staking as a concept is not going away. Like, we are planning to replace this particular staking contract with something that's a little more sustainable, though with a lower yield than you currently see with the current system. And that'll be more focused on a governance utility rather than a pure yield farming utility. So it'll be more in line with lock and stake your tokens up over a period of time in order to get voting power in the system, and then probably some nominal amount of yield, so like you can keep up with inflation or whatever. It doesn't feel as painful to lock your tokens up. But it won't be something like what we've seen over the first few years, the first few quarters to the first year, which is like hundreds or thousands of percent APY on that stake. And that's sort of at the core of why we decided to sunset it, because we could have actually achieved the new vision for staking with the existing contract and just constantly lowered the rewards to something more sustainable. But the side effect of that would have been all of the people who had staked for 10 years early on in the system would then be stuck with all of their initial principal in that contract for the next 9 years. And it felt unfair for us to dramatically change those yields without giving you a chance to get your original tokens back. So instead of just gradually reducing the rewards every quarter, we said, we'll give everyone a 1-quarter warning that this is going to be the last quarter of staking. And then at the end of the quarter, we'll shut staking down, or at least this version of it down, give people back their tokens, and then introduce the new one. And you can decide if you want to restake into that new contract and participate in that form of governance, or you can do whatever you want with your tokens. And we'll talk about some of the other things you can do with your tokens here over the next few weeks. The other question I've heard a lot in this regard is like, cool, you're shutting down staking. How am I going to get my tokens back and when? There's 3 options that were considered on the table when OMMA met. One was to convert it to RL1 and return it as RL1, in which case you would get 40%, roughly 40% liquid at that time immediately, and then the rest would unlock roughly over the next year, year and a half. Second approach would be to do something similar, wrap them in a token that vests over a shorter period of time. So let's say like 3 to 6 months, 3 to 9 months, and return tokens that way so that we're not dumping a huge amount of liquid tokens into the market like in a single day, because that could have major implications on the price. Obviously, we're already struggling with that. So the goal there would be to just return them in a rapid fashion, but just sort of spread it out over a number of weeks or months. And then the final option, obviously, we could give them back as liquid L1, but it does have that huge liquidity cliff and spike issue that we would need to consider, and that would impact everyone who is a current token holder. I personally am leaning towards option 2 or 3, but that is part of why we announced this. And as Ed said, we want to hear your feedback on these options. And I've been reading through it. I know a lot of people have given their feedback. But yeah, that's kind of what's on the table.
Awesome. Yeah. So I think definitely like as we move toward publishing that kind of tokenomics 3.0 paper, like share your feedback. We'll have additional feedback quests and, make sure to keep you all involved. I think another big clarification that I wanted to dive into again before we head into questions is like the mechanics and the API versus reward pool question, right? So what exactly is OMMA changing? And like, what sort of tools did you guys have at your fingertips to sort of like kind of work with within the parameters of the white paper and maybe a little bit outside of the parameters of the white paper to kind of make this adjustment?
Yeah, so I'll talk globally for a moment, just what OMMA on paper is allowed to do, and then sort of specific to the rewards decision that was made. So OMMA is allowed to adjust roughly 4 levers. They can adjust the unlock rate for LL1. They can manage the unlock rate for RL1, which is the rewards token. And they can address the issuance rate of RL1. So how much RL1 do we put into the rewards pool every quarter? And finally, which is something that was introduced a little later, well, there's 5 things. The staking multiplier. So, this is a way to manage the advantage that later entrants into the staking system would have over earlier entrants. So this is to prevent the staking pool from getting stale and making it unattractive for new entrants to come in, because everyone's been established for years. They have so much staking power that it isn't competitive to come in later in the game. And so that was a way to say, like, in the future, if you come in, we could adjust the staking multiplier to 2x. And so a stake that's made at that point is worth twice what a stake was made, is worth twice as much as the stake that was made prior to that change. We did not adjust that parameter. And the final thing is what percentage of tokens go to the stakers as opposed to the creator pool or the ecosystem pool. So if you go to the staking dashboard, you'll see a pie chart, and it'll show you a breakdown. Some like 40% of tokens are going to stakers, another percentage to the ecosystem fund, and another percentage to the rewards fund. So those are all the things we can change. The things that were changed in this particular vote were the issuance rate of RL1 and the percentage that goes to the staking pool. And I saw a few comments sort of complaining, maybe I'm representing this wrong, that we weren't manipulating the APY as we're supposed to, but instead we were like taking away a portion of the rewards pool from the community. And I wanted to both sort of explain how this works, but also sort of explain that those are two of the exact same thing. So as I mentioned, like let's sort of use an analogy here. And we have the staking dashboard, which has a pie chart. So I'll use a pie as an example. The staking pie is something that we bake every quarter. And OMMA can decide basically how big that pie is. And every single day, this is the staking system, every single day we take a 90, like we slice that pie into 90 pieces, and every day we give a piece of that pie out to everyone who's staking. So when we increase the size of that pie, everyone gets a bigger slice. If we decrease the slice of the pie, everyone gets a smaller slice. And that is the exact same thing as changing the yield on your initial investment. The bigger we make the pie, the more rewards you get on the initial investment. The smaller we make the pie, the less your rewards. So it's the exact same system. And so what we did is we shrunk the pie this quarter. And then we also shrunk the portion of the pie that goes to stakers. I hope that's clear. I hope it wasn't too out there. But yeah, that's essentially how the staking system works at a high level. I think did I cover everything?
Yeah, I
In
mean,
that
I think
question?
there's also a question around like, okay, like we're raising a little bit higher than the 1.5% we set out as a guideline. And also like, does this conversation around like sunsetting staking, like, how does that fit into the various levers as well that the OMMA decided on?
Yeah, so we actually stayed within the 1.5% that was in the guidelines. That was a specific intention that was made in that meeting, was to say, like, we know there's a bigger issue coming down the pipeline, which is sunsetting staking completely. That does go sort of beyond the contract, if you will. But the 1.5% we're making this quarter, with essentially no warning, is within the expected guidelines that OMMA was set out with. So OMMA basically took the maximum change that it was represented it could make within that staking white paper, which was a 1.5% drop in the RO1 issuance rate. It also dropped the percentage to stakers by 10%. That was never, I think, really addressed as a guideline or rail within that white paper. And so that's something, we'll need to add at some point. But again, it was the same principle. It's like a gradual drop rather than a significant drop. As Ed mentioned earlier on, if we looked at this purely from the numbers, we should have made a much, much bigger drop, and we probably should have done it a quarter ago. But it does disadvantage a lot of people and makes it feel unfair. So we decided to do it gradually, give people a quarter warning, and then sunset staking because we knew this rate was going to continue to drop. And instead of doing it gradually, which is sort of in the role of OMMA to do, it was like, let's just say this isn't working. It's not sustainable. Let's shut it down in a gradual sort of way with enough warning, and then return people's tokens and do it in a more sustainable way.
Awesome. Thank you so much, Will, for that explanation. And I think, Killen, you're kind of helping us push forward the conversation a little bit in the chat to the sort of like why now context, right? So this is why we have Rebecca here joining us today, is kind of talking about the like, okay, like we talked about the triggers, we've talked about some of the inner workings and clarified like what's actually happening here. But like why did we, decide to make these decisions? And like how are these kind of fitting into our kind of larger strategy and a lot of the exciting new releases that we do have coming up in the pipeline?
Yeah, absolutely. So first, I guess, like, I did want to do kind of a State of the Union, and also just recognize that we've been a bit quiet over the last 6 months. I, in particular, have been quiet. It's something that, I mean, frankly, Twitter just is a shitty place to be. So I just haven't been there very much, and it's not the real work. But we've been negotiating this new direction with an outstanding partner and strategic investor over the last 6 months, and refining our plan to deliver on all the things that we promised. It's taken every inch of 6 months. Those negotiations started in January. So if anyone is frustrated, believe me, it's me, because my favorite part of this job is definitely not spending so much time with tax attorneys and investors and lawyers and whatnot. But we've been quiet, and we should be better about it. Like, I personally need to be better about it. It's hard to come back to the community if you don't have really concrete answers and you feel like you've been saying for a while, it's coming, it's coming, it's coming. It's like, how many times can you say that? And so I just was like, when the deal is done and when the ink is dry, like, we'll shout it from the rooftops. But I recognize that lack of transparency for you guys just feels like a free fall. So that I recognize, and we'll get better about it. I also just wanted to thank Ed up front, and the members of the community on the whole, because, you have stuck with us, and it has been, we're not your typical DeFi protocol. We're not your typical Web3 players. We always had a long-term vision of how this currency would play out. And we knew that was a longer trajectory. We did make some key mistakes, and I'm going to talk about a few of those and how they shift. But I did just want to say, like, OMMA meant a lot to us, and doing it right meant a lot to us. And while there were a lot of different factors informing, like, shit, it's in free fall, like, we really need to cut the staking. We have other things we need, we're trying to balance the token itself is its own product, like, with its own incentives, and a community that has totally different motivations than some of our other community members. So it is like building two products at once. And what we knew was, even as some of the ideas were to be aggressive, a bit more aggressive on that reduction in staking, because, like, most projects come down. Like, there are literally no projects that are at, like, thousands of percents. Like, it's just not sustainable for the project. Ed I had a really good conversation yesterday with Ed, and hearing a lot of the community concerns and sort of the raw feedback about, like, how people are feeling is really important to me. And it was really important to all of us that you guys see that OMMA has a real function. Like, it's not just a bone we threw to the community. Like, Ed pushed back on some of the ideas that we had that were much more aggressive, representing that perspective. And we came to the middle, to a compromise that we felt protected the long term, or kind of stopped the bleeding for the moment, would help us stop the bleeding, but also wouldn't go back on a sense of trust that may have already felt a little bit compromised on your side. So I just wanted to recognize Ed for coming to the table yesterday and, like, giving it to me real, and letting me give it back real, and let you guys know that OMMA is a real function, and the community's voice really does matter and is represented there, and makes a difference. In terms of what you can expect in the fall, so we're ready to go. Like, that's the really frustrating truth to us, is, like, we're ready to go. Spaces and Artifact phase 1 are in the final stages of development. We're pencils down on design. Like, we're ready to go. And we have a deep, highly strategic investment partner that will help us answer an issue that kind of plagues a lot of these double-sided marketplace, which is distribution and scaling. Like, how will you scale? And that was becoming a real problem. Like, how were we going to actually get the level of scale and distribution to make a difference in the entertainment business model, or in how creators get compensated? So it also, I think, when this announcement comes, and I'm sorry I can't do it today, but, like, when the announcement comes, I think you'll see, because one of the things that Ed said to me yesterday was, I think people are concerned that, like, even though you keep going and you're developing the media platform, or there's spaces is going to roll out or artifacts going to roll out, that like the value isn't going to accrue to the token anymore. And so much of us like put so much effort into that. We want to make sure that there's value accrual to the token. And I think this partner and this investment will make it really clear that that value accrual is very much still, like, the token is still very much where we expect the value to accrue. But a media platform on the whole has to have a big enough funnel. So we're careful not, even though we may accept fiat and whatnot, like the long-term plan, the refocus of the token economics proposal that Will is working on alongside our strategic partners is designed to support accrual of value in the token, and also delivering against the long-term promise that we made, which was about connecting IP holders directly with their fan base and creating more equity and more value on both sides of that relationship. So staking alone was never really going to cut it in the way that it was. We are the bottom line, and this is like as honest as I can be, and it's incredibly frustrating to me, is that, you know, we got this great partner, and we're like ready to go. We're ready to announce this next round and everything, and we had to negotiate and revisit a bunch of things with our previous investors in order to be able to do that. And there were a couple of sticking points that we still had to negotiate through with a few of those folks. So we're at the tail end of that. It's going well. It's just taken forever and it's painful. But that's what's going on behind the scenes. So the long-term goal is Media 3.0. You guys may not really like know, like, that might sound like jargon or whatever, but what it really means is, like, if you follow creators or you follow anything that's going on in Hollywood, retention of ownership of your IP is like one of the hottest topics going on right now. And creators being able to retain that IP, and then making sure that there's like greater equity and economics in these types of platforms that distribute content and allow IP holders to like kind of incubate their audiences and grow their communities and collaborate with their communities directly. That is what we're chasing, and we're doing it with original IP from Neil and Weta as the sort of test case for how we can make that happen. Additionally, and Neil has been like heads down writing chapter after chapter to ground this new world building. I mean, like, this is our edge. This has always been our edge over other platforms that are trying to do similar things, is that we have one of the greatest storytellers at the helm. He's fully activated now. He is like entrenched in this storyline. He's writing about it on a daily basis. And he's, you know, very much guiding the direction of what you'll see roll out in the fall. So that's really exciting. And also we've worked with him on securing options to other content as well, so that we can make sure that like we continue to maintain and harden that competitive edge that we have. With all that said, and that shit takes time. Just to be real, like, it takes time. Like, Hollywood is archaic, right? So like you're working in very traditional systems to try to do non-traditional things. And it's taken a while, and investment has taken a while. So with that said, I'm just going to discuss like some of the issues that we had, just with full sort of honesty and transparency about it. The L1 token was initially conceived of as both as a gas token, right, and currency for the decentralized metaverse. No one really knew what that meant, but we had a good sense for where we needed to head. But shortly after that, like after we raised our friends and family, both like crypto and the metaverse became basically like dirty words for about 2 solid years. And even though they continued developing, it was like really hard to raise money around those concepts. And for a number of reasons. We also had, some disagreements about the tokenomics proposals with our original co-founders. We worked through it, but all of those things take time. And we needed to find a more viable path and strategy to market. We had a hard time fundraising for those sort of myriad of reasons. Now, investment was coming in the whole time. Over the last 3 years, investment has been coming in, but it's coming in small tranches. And what that does is it means that like my constant, I can never turn my focus back like solely towards the product. I have to come in a constant state of making sure that we have what we need to keep going. And that makes it really hard to accelerate, right? So like when we talk about roadmap, whiplash, or like product plans or things like that, it's hard to hire and get the acceleration you need when the market is sort of contracting, and when you have these sort of small increments of cash coming in. Like you're basically keeping the lights on, but like you can't really like, you know, gain a lot of steam and go and chase things in the way that we wanted to. There were times, and I'll say like for the team, there were really tough times where like we worked without pay and just kept reinvesting into the business for months at a time because of how much we believe in this. We are all locked up for eternity. So like, you know, there is a huge commitment. Like no one's abandoned this project. I've seen some of those comments in the community. I just wanted to address that. One of the other things was that one of the choices the foundation made, partly in response to community enthusiasm at the end of last year, was to support the listing of the token with the idea that like the community and the market and our tokenomics strategy would support some kind of stability. But as you guys know, being listed is kind of a gamble, right? And it's a very expensive sort of endeavor and game to maintain. It can be really volatile. It can be really distracting. It can make people make bad decisions, which we were like really clear we did not want to go that route. We didn't want to go this sort of traditional, like, you know, not traditional, but some people have made different decisions. And we were like, we don't want to go that route. Like yes, like the token is hurting for sure. It's in the gutter. But like the only thing that's going to reverse that is token utility and a real business plan and real announcements and investors that are of very high quality, that are a signal to the entire industry about how serious we are about this position. And so that is where my focus has been. And I apologize if it has come across as like not caring or not seeing what's going on with the token. We have. I just am a believer that the problem was systemic. So the truth is that like, we have very little sell pressure on the whole. It's just circulating supply and liquidity are so low that even like $1,000 of sell pressure can have a really disproportionate impact on price. I do think, like I said, the issue is temporary. It was in part due to our tokenomics design. And one of the things I just want to observe outright is, you know, we had a lot of early debates about the design of the tokenomics, like a lot. And we were a bit divided on it, but one of our original co-founders, Peter, is a brilliant guy, and he, you know, did a lot of he had a very well-researched opinion that he worked through with other economists, and we said, okay, like as you do with your co-founders, you say, okay, like we're gonna follow this lead. But scarcity alone does not drive demand in any business, and nor does staking alone, like without a product underneath it or without a long-term vision to invest in. What you guys need to see from us is strong utility and actual evidence that we are moving towards the vision. And we're finally at the point where we're able to give that. And this fall should be really, really exciting. Like I said, everything has continued development. Like everything we've talked about has continued development. We just haven't been able to make the announcement until the ink is dry with this, with our investors and everybody's content with the way we're going to move forward. So I wanted to just observe that, like it's part of this was the assumption from our early tokenomics design and a function of going to market early. Like we went to market with the token before we really knew how quickly we could deliver the media platform. And that was, in retrospect, something I would change. But we, at the time, you know, you make the best decision with the information that you have at the time. At the time, it seemed like, listen, let's see what the market says. Like the community wants to see this out there in trading, and they've invested for the last two years. Let's go. anyway, this is the nature of a startup, is like, if we weren't behind the scenes pivoting to meet the market and to find the next sort of phase of the product, then it would be dead. And I know how it looks. I know that it looks that it's like bleak on the on the token front. We're all in that game with you. Like, but I can tell you that the future is bright because I'm seeing it every day. You guys aren't, and I that was kind of Ed's point that came across really clear yesterday, which is like, you guys are quiet and nobody knows what's going on behind the scenes. They don't know that there's all this great conversation and roadmap planning, and like you've got all these things in the work with Neil's options, and that Artifact has really evolved into that IP that we announced in Variety a year ago. So that's what I'm here to sort of reassure about. I wish that I could have, we wanted to announce this whole thing a month ago, but we couldn't. But we had the right vision, and while like our focus might have shifted from metaverse language, we still observe that like immersive, multi-chain, interoperable kind of content is where things are going. But in the short term, there was no real market for that. And it's an extremely expensive space to develop for, and no one was investing in it. So we needed to kind of like go back to basics with more traditional. How do you get people involved in a story? We have one of the best storytellers around. We're not really leveraging it. And so that's where we've really spent the last 6 months focusing, is really on that pivot to a more kind of immediately viable market that can evolve along with the vision. So I guess my point is like, we made some mistakes for sure. Like there are things I would do differently. This has been a wild ass ride. But it's like managing building two different products with two very different markets and two very different audiences at the same time, which I think I didn't fully understand until a couple of years in. But we're making I think we've made the vision was always right. It was just making sure that we got the resources and the right partners to be able to answer in the best way that we could. And then really like hardening our competitive edge in Neil's contribution. So it's the wrong time to panic. And I just kind of wanted to put that out there and say, look, just to be crystal clear too, because I've seen some of these comments, employees and investors are all locked up. Like, now we do have like liquidity events coming up. This was one of the things that we had in mind when we were looking at the whole sort of tokenomics model, and like, shit, when is everything coming online? And like, where is the token at right now? And how do we protect more volatility? But, I never want anyone here to feel like we haven't continued to be fully invested and continued to progress, even if we were a bit quiet. We just had a small team. We went heads down. We bootstrapped, and we got ourselves, not only did we kind of pull a rabbit out of the hat, but like the best possible one. So anyway, we all own this thing. Thank you for sticking with us. I wanted to just kind of acknowledge some of those issues and let you know that we saw them. And part of what the action you're seeing on OMMA is to address them. And yeah, I guess I'll open it up for any kind of questions.
Yeah, definitely. I think we've got about 20 minutes left. So, but thank you so much, Rebecca and Will and Ed, for getting into it. I think, starting off with kind of your context, I think is super key kind of as we get into these questions. So to really kind of like take things back away from big picture and more towards like, the practical. I think a big question that we keep getting is like, okay, so you've explained the levers that we're pulling. You've explained like this new pivot to, kind of taking a deep look at L1's token utility. But how is this exactly in the best interest of the community?
You know what, Case, before we go there, I did just want to
Yeah,
answer, like I saw this one comment
sure.
in the chat.
Yeah.
So when you say Mall V, I think, I don't know who's going to invest in it, really strange. I just want to address this for a second. We were always different in that and this was my personal view from the beginning, and it's why I was hesitant to even get into crypto, is that a lot of the projects I felt like didn't have real longevity to them. They were highly speculative projects. And when that speculation turned in a different way, or there was a new project or whatever, that speculation, people move their bags to another, to whatever's like the hottest new thing. The only thing that sustains you in that situation is if you have real utility and a unique edge and a consumer base that is showing kind of a greater potential for the ecosystem than just the speculative value of the token. We're not a DeFi protocol in that sense. Like, we're not just pushing transactions or and taking a piece. We built a platform. Now, there were some projects, and we did this research early on, that just tried to support the building of a platform on a transaction fee percentage of like 1.6 or something. They couldn't sustain it. They were drawing down massive amounts of money out of their token treasury to try to support building the platform so that people would actually use the protocol. We saw that from the outset and didn't want to go that direction. So the media platform itself that will then use the token is a huge part of the value that people see when they invest. A huge part of the value is what we've developed in Artifact. It's in having options on Neil's content. It's the ability to actually prove out what you're saying and draw the consumers and draw the creators that will then use a platform that is built on decentralized infrastructure. That is why people invest. It's not a scam unless you look at it as through the lens that you look through most other speculative types of projects. That is not what this is. It never was. And I've said it from the beginning. If people are looking to make a quick buck, go do a meme coin, dude. No judgment. But like, that's never what we've put across. So yes, like, am I pissed it's taken us this long? For sure. But that's where we are, and it doesn't mean that we won't get there.
Awesome. Very spicy. We knew this was going to be a spicy one. And again, appreciate all the questions and all of that stuff. Andy, before we get to your question, I think that'll be a great way to sort of end on big picture. But again, I do want to get into just some like nitty gritty questions that we have heard come up in the community time and time again. So Will, I'm going to give you this one. How is this exactly in the best interest of the community? Like, especially with the like decreasing staking rewards and kind of starting up this new fund?
Yeah, part of this ties into what I was explaining earlier, where, I mean, okay, so why is it in the best interest of the community? First of all, if we define the community as token holders for now, which I don't think is the right way to think of them, but for the purposes of OMMA, let's think of it that way. The community holds a large number of tokens, and the price for that token, which seems to be like the primary concern for good reason, has dropped considerably. The reason it's dropped, I mean, to be overly simplistic, supply demand. There's the supply side of the equation. We've been giving out a lot of tokens as staking rewards. And part of what OMMA did this quarter was start to address the supply side of the equation. So dropping some of the liquidity in the market, especially in anticipation of like the investor cliff and other liquidity events coming up down the road. So it's just starting to address some market forces before they hit. So that's one thing we've been doing. And that's, again, like one of the reasons we did it was to limit liquidity. And because that's, price is a function of supply and demand, hopefully that will help stabilize price in the aggregate. It's not going to happen overnight, but over time, it will be beneficial. The other side of the equation is demand. And that's basically everything Rebecca has been alluding to in her response just now, which is, we had a large quiet period, which impacted confidence. We had, some struggles in trying to get investment on an accelerated basis and get product out the door as fast as we had hoped. And because of that, because it's taken so long, we we've sort of outlasted the original runway of staking that we originally invested. We were pretty clear-eyed when we developed the system that it was a race against time. Like, this wasn't sustainable, that at some point during that first year, you had to deliver organic value and utility for the token outside of staking, or the liquidity would get out of control and it would cause a death spiral. And it's just taken longer than envisioned to get that product out the door. And we're very close now, like literally months away. But because of that, we needed to take some steps now to address what we could address, which is liquidity as OMMA. And dropping some of that liquidity obviously helps everyone who's currently a token holder, because you've been getting an immense amount of rewards over the past 3 quarters. If you started staking earlier, you should have gotten a pretty good yield. And by shutting down staking and restarting it, we're basically locking in that advantage that you had early on. So while investor tokens were locked, while the team tokens were locked, and we couldn't participate in staking, the community has largely benefited from all of that early yield. Obviously, it doesn't mean much if the price crashes, but as Rebecca said, that'll come over time as the product comes out and we get true organic adoption and utility of the platform. So yeah, I mean, it's sort of a mix of addressing liquidity helps shore up the supply side of the equation, which helps everyone who currently holds tokens. Resetting the staking system and returning tokens locks in the early rewards that you did get, as well as, I hope, feels like a fair way to give back the original principle, because we are changing things dramatically. And yeah, as the product gets developed and releases over the next few weeks and months, hopefully the demand side of the equation starts improving along with it, and we'll see a recovery in the price.
As a next topic, I do want to go into, we got a ton of questions from the community around the future of vote tokens. We have some upcoming elections coming up, right? Like, we have the Open Metaverse Arts Council seat. We've got another seat for the Open Metaverse Monetary Authority. So with the kind of sunsetting of the current staking system, lots of questions around, like, okay, what happens to my vote tokens? How do I use them? Like, what is their role in this new system?
Vote tokens will remain. So if you've been earning vote tokens, you'll keep them. They're not going anywhere. They'll still be used in council elections, and we also have some ideas of how they'll be used in sort of this revamp of the platform and some of the new features that are coming out alongside it, which we'll be talking about gradually over the next few weeks. But at a minimum, they will continue to be used for voting in members of OMMA, members of OMAC, potentially like certain decisions within OMAC when it comes to like who we give grants to. They'll be used to influence some of that. And yeah, as new features come out and we talk about them, we're going to be incorporating governance into a couple of those as well. And the new staking system that we introduce will also be a new way to earn a vote token as well.
Awesome. Yeah, that was going to be my big follow-up, is like, okay, that's the existing ones, but how do we earn them in the future? Yeah.
Yeah,
totally.
and part of what we want to do is also sort of engagement-driven governance power as well. So from organic usage of the platform, you will get decision-making power within the platform as well. You don't necessarily have to buy your way into having a voice in the platform. You can just use it and be an active member of the platform and also get a voice.
Mm-hmm. Yeah. Super, super important. Andy Bausch, I wanted to address one of his questions in the chat kind of for our last 10 minutes here. And I think this is like, we can kind of zoom out again towards the big picture, but he asked, can you expand a little bit more like on your plan to leverage the Neal Stephenson IP, or peel apart further, like kind of what we mean by this Media 3.0 platform. So like, if a lot of the success of the token price kind of relies on, actual use cases and kind of bringing in people through these kind of exciting new announcements that we're continuing to tease and dangle in front of you, like, can we go a little bit deeper into like what that might look like, or what our plans are potentially in the future for starting to, get folks involved in developing these new kind of tokenomics spaces, all the
Mhm.
new stuff that we've been talking about?
Yeah, so I mean, one of the things, if you've listened to Neil from the very beginning, one of the reasons why we all got involved in the project and why it was a passion point for him was changing the economics and sort of the archaic distribution and licensing world. For many, many, many years, Neil's Snow Crash was locked up. The options were held fully guild, meaning like you can't touch anything, not new media, TV, theatrical, any of it, for about 30 years. And even when I worked with him at Magic Leap, that was super frustrating to us, particularly on Snow Crash. Snow Crash was picked up. Obviously, you guys, some of you may have read this if you're Neil fans, but by Skydance. Obviously, Skydance is going through its thing with Paramount, but is in development. One of the visions, of like the vision around the platform, is connecting, as it always has been, sort of connecting that, improving the economics for the creator and connecting IP holders and their fans more directly. Potentially even creating equity through participation in an IP kind of universe, right? We've talked about this for a long time. I always give the example of Spider-Man with my son. One of the and frankly, like, a lot of people are chasing this right now. Like, there's a lot of market validation, particularly in the last 6 months to a year, around this concept of, instead of like, if you married the functionality of YouTube and Discord, or like brought together community and media distribution and you had them in one place, what if that was owned by the creators and the validators and the fans, who make that an interesting place to be, versus a Google or a mega tech platform, which holds back a lot of those royalties, really, to fund like totally different types of business streams. So there's been, as artists made like a lot of noise about this, and strikes took place, and and people were paranoid about AI and mega tech platforms kind of holding all of this. And you see things like with CBS and Paramount, like wiping Stephen Colbert out, and like there's a lot of concern about overreaching kind of ability of like corporate or politics to shape the kind of content or media that can be made and consumed. And so there's a lot of market validation for this concept. What's really hard about it is that you're essentially talking about a creator platform in which you need to draw a ton of creators. And you can get indie creators, but you also need like really high quality creators to come to the table as a signal to the rest. But you also have to build out the consumer side of the platform. So you need like both the creator and the consumer. And that takes either a really serious edge, or a ton of money. And Story Protocol kind of saw this opportunity early on as well. And I just saw a thing from like OnlyFans the other day about this. And I mean, there's like a bunch of people that are chasing this. And as AI has heated up, there's a lot of conversation too around like, what are these collaborative models that fans can participate in fan fiction? How do we make sure that they're sustainably sourced and that material is licensed, et cetera? So all of this like market validation existed. We were always developing Artifact, which is original IP from Neil, because that was sort of clear of all of the stuff that would hang us up with the old distribution and licensing system, like who owns publishing in this region and who owns distribution rights in this region, who holds the options for the next 5 years. Like there was just like a lot that we had to sort through to do that. So we developed this original IP as well, and one that was like more fan forward. So Neil really wanted to say, like, if I put some narrative scaffolding on something and I have an idea for a big story, how do we build it in such a way where the community can participate really early on, and like upside and access and building that world with us and getting some equity in it, and how do I retain ownership in the process? So that's why we went with Artifact, because it was just easier for us to start from scratch in terms of building the right kind of royalty system and ownership system that we wanted. Additionally, we had a lot of questions from investors over the years and from others about like, what is your access to other Neil IP? And so that was something that we started to look into and see like what's available out there. How do we make sure that since we're a platform for connecting fans and with IP holders, and we have an IP holder, and we have that IP holder stance, like, how do we make sure that we're sort of part of the value chain there? And we also had gotten wind through Neil and other people of some phenomenal like treatments that had been done around other great, really well-known IPs of his. And so we made a list of those, and sat down and did all the work and the conversations with Neil and others, and the process of, I don't know if you guys know sort of what the process of getting something optioned is, but usually you pick up the options, and all that means is like you have the right to develop something and then potentially sell it into TV or theatrical or whatever development. You're kind of secured a space in that value chain. So that was another sort of underlying part of the strategy. And I can get more we'll get more specific about that as part of this announcement. But like I have to be really careful about making sure that like we're able to kind of have the thunder that we want when we announce this with investors. But that is like, again, when we talk about a competitive edge, like Geraldine's experience, as head of international for LeBron's production company Spring Hill, and her background at the NBA and Magic Leap and all these other places working in this kind of thing gives us an edge because she knows how all of these deals are constructed. It has an incredible network, and obviously myself as well. So and you guys may have seen this announcement, but we did do an announcement not long ago with the creators of Bob's Burgers, where they're developing a new animated series, and they didn't want to sell it to Nickelodeon or kind of the standard fare because they wanted to retain ownership of the IP because of all the shit that comes along with giving away your ownership and your rights. And it's a lot of sitting around and waiting for other people to give you the permission to do what you love to do. And so like that's in the animation category, where we saw a real problem and that we could solve. Animation was one of the big categories. This kind of casual gameplay with like Artifact kind of looking a little bit like an RPG or a card game type of setup. And then Geraldine is obviously really passionate about the opportunity in sports, and so we announced with this relationship that you may have heard about with Algeria, their team, the Fenix, which is their national team, in the lead up to the World Cup, are releasing a game on Lamina, and in a space is where you'll have them releasing behind the scenes content, interviews with the players, mini games, quests where like the fans can connect directly and gain like sort of special access. Or it's a little bit up to the creator what they want to offer to the fan, but the token will be a primary asset in doing that. So, I mean, I hope that answers sort of some of what was.
Definitely. Yeah. And I think, we'll be diving into that a lot in, the upcoming Spaces white paper and a bunch of other stuff we have coming in through the pipeline. So I'm going to wrap actually. So thank you again to Ed, Will, and Rebecca for joining us, and to all of you for your thoughtful and yes, sometimes tough questions. Remember again that today's conversation is kind of just the first step. I'm going to be posting like a full recap and FAQ later today on our Medium blog. And I'm really excited for this one. We're going to be hosting up a follow-up AMA over the next couple of weeks, focused entirely on Spaces and starting to reveal some of that utility. So definitely stay tuned for that. I know the community has been begging to get some sneak peeks, and we're finally like getting to the point where we're going to be able to start leaking some of that. Until then, keep the discussion going on in our designated Discord threads. And of course, do not forget your secret code for the Quest credit for attending this AMA. Just posted it, as well as the Quest link. Submit by late next week to redeem your points and XP. Wanted to give a little reward for folks who are tracking this closely, submitting questions. We're back on Interact, and it's nice to be able to, continue rewarding folks who are with us day in and day out and providing feedback. So yeah, definitely. Yeah.
All right. Well, thanks everyone. I will say, in order to cope with the stress, I did get a kitten. So if anybody is a fan of kittens, and you want to look. Oh, he's like kind of chilling right now, but he just had
Pull him up.
he's in his little box.
Yay.
He's like a little sad. He's got this cone on his head because he, had to have a little surgery. But yeah, he's good and cuddly. Anyway, that was it. Just a little kitten to like leave it on a very positive note. And thanks,
New
everyone.
LAMINA1 mascot, everyone.
Exactly.
Yes. Okay.
All
right.
right.
Thanks,
Bye,
everyone.
guys. Thanks so much.